Okay, joining us now we have Ajay DD Singhania, Managing Director and CEO at EPACK Durable, to talk to us about what trends are playing out, of course, what have played out in Q1, but what to expect going forward as well as they diversify. Welcome, Mr. Singhania. Talk to us about both the Q1 overall in the context of the full year FY25, as well as how Q2 is playing along for you.
Yeah, hi, good morning. So see, being a pioneer in air conditioning OEM business, obviously 24 was a subdued year wherein we faced a lot of challenges in terms of the weather uncertainties and timely rains and all. But obviously Q1 25 has been exceptionally well for us. We grew almost 80%. The industry has been growing at almost 35-40% plus. So one of the best times for EPACK Durables. And coming to Q2, definitely the growth momentum continues. The market has been responding very well, and India being under-penetrated in terms of AC, we can really feel the heat not only in the climate but also in terms of sales.
Mr. Singhania, you've recently acquired Epavo Electricals Private Limited. Now, from what I understand is that it manufactures DC motors, and this is probably, a raw material for what you manufacture. So I want to understand that you will be utilizing this for your own consumption. So I think that this will impact your margins overall, and this could be margin accretive for you. So I want to understand that going forward with this acquisition, will your margins improve, and if yes, by how much?
Okay. See, first of all, we have not acquired Epavo, so it was 26% EPACK and 74% RR Wire. So we have increased our equity from 26 to 50% now. So it's now a 50-50 JV between both the companies. Definitely, see, the idea behind starting of Epavo and now increasing the shareholding has been that we understand, one, that we'll be utilizing the motors captively for our own consumption. At the same time, we have a large customer base available to supply to. So this would be, the results would definitely be independent, but it would help us secure the supply chain, reduce our dependence on China further. So that's the whole idea.
Mr. Singhania, good morning, sir. It's Puneet this side. I just wanted to ask on your backward integration currently, you are manufacturing a lot of components for air conditioners currently as well, and you've also commissioned a new plant in Andhra Pradesh for the same. I wanted to understand, within Andhra Pradesh, is it only for room air conditioners, or also will include small appliances, which is another segment that you're currently in? And I also wanted to just ask you one key question on components, because PCB is only currently in Bhiwadi facility. Is there any particular reason that you don't have the PCB manufacturing? Because it's going to be one of the most important components going forward for you as well. So just wanted your idea on both these queries. So one's on PCB specifically being in Bhiwadi, and also on the current product lines which are there in the new facility.
So see, coming to the product lines in the Andhra facility, so we started off with the AC as the first product, but at the same time, our manufacturing facilities are fungible in terms we can utilize them to manufacture the small appliances as well. So now in this quarter, we have started putting up facilities for the small appliances as well. And Q3 onwards, we believe that we'll start production of the smaller appliances in the Andhra facility. So it is already in the phase, so we've been taking a step-by-step approach. So small appliances will start, the mass production would start from end of October onwards, and especially the washing machine which we are launching is going to get manufactured in the Andhra facility first. The second question in terms of the PCBA, so the PCB assembly we started off in our North facility first, because we have created enough capacities here. Now, as we are using the same facility to even supply to our Andhra facility, so in phase 2, we will be in a position to put up the PCBA manufacturing even in Andhra. So currently we are utilizing our capacities which we've installed here in the North. So once these capacities get utilized for the North itself, we'll be in a position to invest for the same in the South.
Right, Mr. Singhania, talk to us about revenue contribution going forward. So you're expecting, of course, these new products to start to contribute to revenue. Is H2 the likely expectation, H2 FY25, in a significant fashion? Is that how one can look at it?
So see, I'll put it this way. Previously, if AC was contributing almost 85% and of the other appliances. Now going forward, as we are increasing our footprints in the other appliances, also the large appliances like coolers and washing machines going forward, and as we are growing our portfolio of the small domestic appliances, so this H2 definitely the contribution is going to improve for the other appliances, the non-AC appliances. So I mean, even if I give an outlook for the current year FY25, I'll say AC would be, let's say, 78 and almost 22% from the non-AC business. So this is the way how we are improving our capacity utilization on the H1 and H2 basis.
And how would FY26 mix be like? Because that will be a full year when you'll be doing pretty much all appliances. So just trying to get context there.
So gradually we aspire to bring it down at least 60-40 in terms of AC and non-AC business. But 26 we should definitely be able to achieve, like say 74, 75 and 25, 26. So gradually it will keep on improving.
All right, and Mr. Singhania, in terms of finance costs, you've guided that, finance costs will reduce in Q2 and Q3. So I want to understand that, what is the progress there and where do you see debt going by the end of FY25?
See, in terms of finance cost, our core focus has been to improve our working capital cycle. So this is where we see a lot of capital getting blocked. So we have already reduced our working capital cycle from almost 90 odd days to 45 days in the last quarter, and we'll gradually keep on improving that. So that's somewhere we have tried to unlock our blocked capital, and this is how we've been able to improve our finance cost as well.
Now, Mr. Singhania,
we don't have now a large exposure in terms of the debt, especially the long-term debt. So it's only working capital which contributes towards our financial cost.
Mr. Singhania, I just wanted to get back to your room and room RAC segment specifically, your air conditioner segment. Now, you have mentioned that you have roughly 24% market share in the ODM segment specifically. Could you quantify specifically what would be the ODM share for your current revenues for, say, historical, for FY24? What would be the total ODM share specifically that you might be getting for room air conditioners? And I also wanted to ask if you have been receiving, are you compliant with PLI benefits for room air conditioners as well? And if yes, have you received anything in FY24?
So firstly, in terms of the RAC market, the overall RAC market was close to 10 odd millions in the last year. So ODM put together do almost 35 odd percent. So it could be 35 to 37%. So that means almost 3.5 to 3.7 million units get manufactured by all ODMs put together, and we contribute almost 24% of it. So that's in terms of the quantifying the total RAC market in India. For the PLI benefit, so we were one of the top 4 companies to commit the highest investment in PLI. So we committed almost 300 plus crores in PLI from EPACK Durable, and we got our PLI benefit for the FY24 and for FY23. Sorry, 24 we are on way to achieve it. So hopefully we should get it. By end of this year, we are expecting it. So last year, in the first year, we already received it, and for the FY24, the amount is close to 30 odd crores, which we should get.
I just had one follow-up, sir, on this particular facility. Now, currently you did mention that, newer segments will also be added. Now, washing machine, one of the key segments which, has caught my eye. I wanted to just understand, because it's not a segment that everybody has entered to, but it has very high growth opportunity, because I think the penetration is still, around 20-25%, if I'm not wrong. So I just wanted to understand the opportunity here and what could be, the margin picture going forward. You have been around, the 6 to 7% range in the last couple of years. Do you see the addition of non-AC components or, the consumer durable business specifically, because there's a lot of competition in this segment? So just wanted to understand on these 2 factors.
See, firstly, all the segments we are into, like AC, the lowest penetration is almost 6 to 7%. Different reports claim different thing. And even washing machine is not that high as 24%. So it's like 12 odd percent is the penetration for washing machine. So both the products are on high growth phase, and next 10 to 12 years, definitely every year we'll say them multiplying, and the forecast is at least 15 odd percent growth year on year for each of the both segments. So definitely, I mean, these are both the high growth thrust area products, and ODM is something very unique, because see, for us, the capability to manufacture AC helps us utilize almost 100% of our capacity during the first half of the year. So for us to improve our margin profile and to improve our asset turn, it is very important that we start focusing on products which are predominantly H2 products. So washing machine is one such product which starts picking up from May onwards till July, August, September. So these typically 4 months help us utilize our capacities better, and definitely then it will help us improve our margins as well. Because we are not making any additional substantial new investments to manufacture washing machines.
Mr. Singhania, one last quick question. Your FY24 revenue did take a 7% hit as compared to FY23. So I want to understand by the end of FY25, where will your revenues be at? And quickly, even commodity prices are expected to improve. So where will the margins be then?
See, FY25, we are on track to at least clock a growth of anywhere between 45 to 50% growth organically. So we will definitely clock a growth of 45 to 50% plus for this year. And similar growth is what we are working on for the next 2 to 3 years, definitely. So we'll continue our growth journey on the top line and bottom line both. And for the commodity prices, definitely the commodity prices have softened. But at the same time, since we are an OEM, at most of the times, we are kind of insulated with any changes in the commodity prices, both upside and downside. So that does not impact us much.
Got it. Okay, thank you so much, Mr. Singhania. It's been a pleasure chatting. We are completely out of time on this edition of the SMID show. From Puneet, Mahima, myself, everyone who puts the show together, thanks so much for watching. Hope it was productive. Stay tuned to NDTV Profit. More action on the other side.